Hi traders, welcome to the live webinar with Admiral Markets. My name is Chris. Today's focus is going to be taking a look at the market structure and patterns. First of all though, these two disclaimers. First, the fact that this video and first of all webinar of course is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country or residence, and then contact the appropriate entity to find out if it is suitable for you. Also, please note that trading foreign exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Alright. So first of all, before we take a look at the charts that I'm going to be showing you in just a second, I wanted to show you admiralmarkets.com website. You can find all that you need right here. First of all, how to start trading, how to open an account as well, what kind of platform can you use, the financial instruments that you can trade, and of course, analysis delivered by Nanit and myself. You can see the articles, analysis, and of course, education as well with webinars. So you have it all right here. Some extra info about promotions at the very end. And if you want more info even here about us, you can see what Admiral Markets is saying regarding regulations and testimonials, etc. So a lot to discover, but first, if you are new here, hang on with me and let's take a look at what's going on in the market. The dollar was moving upwards. There was strength on the dollar. As you can see, your dollar was falling after the news event. So, let me move over the chart as we speak, actually. 1 second. Much better. There we go. This is the euro dollar. For those that were watching my video, you know that I was bearish. I was looking for a turn up in here or a bit higher, but definitely looking for continuation of this bearish structure. Now, the reason was because of multiple reasons. I don't want to repeat myself too often, but basically 5 waves completed here like this. This looked like an ABC. There was divergence on the 4-hour chart as well between these tops right in here. So basically price is in that case most likely going back to the long-term moving average, which it just apparently has done finally. So because of the divergence between these tops and the correction that we saw, an expanded correction was likely. So from my point of view, the pattern that we're seeing here is an elevated pattern called an ABC. So from that perspective, we can take away the minor fib here and just place it on the wave A for the moment. Let me zoom in so you can see that a bit better. Let me close the mini terminal for a second. And let's put a fib on this very first correction, the wave A, from top to bottom. And you can see the price roughly stopped at the 61.8 fib. And now it's at the bottom, the previous bottom. The target, the first target is the minus 272 target at 116.25-ish, where there's the S2 as well. And the next target, perhaps the minus 61.8 and the S3 at 115.50. Those could be bouncing spots for an uptrend continuation. Why? Because in that case, after price has made a 3-wave down like this, we have to realize that the trend could still continue. If we look at it from the daily perspective, you can see that price is making higher highs, higher lows. There's good space between the moving averages. This is an impulse and good bullish momentum. So if we put a fib on the potential wave 3, something like this, for instance, right here, or even use this fib perhaps. Let me get rid of the ABC fib now. There we go. Both work well, but in any case, you can see price roughly stopping at the 23.6 fib, no matter which one we use. Right? That's a debate which bottom to use. But for the moment, you can see how roughly the 23.6 fib has provided support. The next target, therefore, the 38.2 fib at around 116, or the 50 fib around 115. I think that those are likely bouncing spots for an uptrend continuation, especially if price moves slowly to the downside with not too much momentum like this. So the bearish price action could be choppy. We could see down, up, So the bounce at 116.25, 116 could be strong. It could bring price back to 117. Then what price could make one more downside like this, make a choppy downside, and then show a bigger push up. That's kind of the pattern I'm expecting in this particular market structure. It's basically trying to read the psychology of the market and see what is the next step that fits best within this sequence, right? It's like a jigsaw puzzle. You have half of the puzzle is clear. How does this particular piece fit in that larger puzzle? The same is valid for when you look at market structure, when you look at patterns, specifically when you look at wave patterns, of course. Also, one more thing I want to add, just in case you missed it. The euro dollar has a very strong July monthly candle. The candle is, first of all, one of the largest candles since maybe even a year, right? This one was probably a tad bigger. That dates back to November 2016. So large candle. The close couldn't be closer to the high. To be precise, it was only 4.5 pips. The candle itself, from low to high, had a distance traveled of 533 pips. So just to quantify that, the candle itself is 533 pips, one of the biggest candles this year. The close was only 4.6 pips away from the high. The wick, therefore, is less than 1%. Less than 1%. So anyone who knows my rule book for candle closes near the high or low knows that anything within 33% is okay. Anything within 25 is fine. 20 is good. 10% is excellent. 5% is amazing. 1%, well, I think you get the point. It's very amazing. So that is a strong close, to not mince words about it, right? I'm very confident in that. Doesn't mean that it has to necessarily continue to the upside. There's no guarantee, no such thing as a guarantee in the forex market, but I think there's a high chance. So I think that this candle could get retraced, maybe to the 50 or the 38.2 fib. Those are likely bouncing spots. It should not break the low. That would definitely be an invalidation. Or if this month is a bearish candle, that would also invalidate it. So within this month, within intra-month trading, I'm expecting a push down to the fib zone, my optimal fib zone at 38.50 fib, and a bounce up to the minus 272 target at 119.92. Of course, very close to the round level of 120. At 120, we'll have to see how price responds. There could be another wave 4 correction, in my view. We'll have to see. That's something for the future. It's still far from now. In the meantime, let's zoom in actually and take a look at some of this bearish price action. So there were a couple of trades that were possible this week. The engulfing twin at resistance, if you watch my videos, the break of the zone. I don't think this pullback was a good one because of this pin bar. So I mean, theoretically could have been traded, but I was skeptical about that. But the engulfing twin, the break here were good ones, in my view. How about now? Well, I think that's a pretty good 4-hour bearish candle. And I think that continuation is pretty likely. Could be good to put a fib on that candle. Let's get rid of the monthly candle now. So obviously, waiting for price to get down to 116.25 or 115.50, 115 is very perfectly fine, in my view at least, is something I'm going to do and wait for. Doesn't mean that I will not take any trades until price makes that retracement. It might not get that deep. So for the moment, I want to trade it downside because we had, in my view, bearish pattern, a bullish correction, and a bearish continuation. But I realize that my target is very limited because of the bullish monthly candle. And anywhere between 115 and 116.25 is the very max that I could expect for any bearish trade. And it's counter trend still. So one idea that I have is trading it to the downside as a bigger correction. The second is trading a long-term bounce at the support zone up to 120 or just before 120. This retracement looks pretty good. Let's put a fib on that candle. And we see prices at the 38.50 fib. Let's go to the hourly and a 15. All I want to see is whether this correction is over or not, basically. I see some comments, and I'm going to respond very soon. I'll just finish the euro dollar. Just hang in there. Don't leave yet. I'm going to get there quickly. Regarding this correction, I am not sure whether this upside correction is finished as yet. This could be an A, B, C. And in that case, maybe the 61.8 fib is neat at 117.30, 117.50. Could be good spots for such a correction. I'm going to quickly use my Whisk tool on a different PC so I know where those levels are. 1 second. All right. I think that there are two options indeed. I don't think we'll get that deep, but I think roughly somewhere in here, price could retrace, complete this ABC and turn. So it could be interesting to see, a bounce there, or if price fails, basically, not fails, but pushes up, pushes down, and makes a hook back, and 5 to 6 candles that don't break this top, there could be something like a head and shoulders. We don't see it now, but something like this, for instance, like this, and that could be interesting. So we have, just to show you, the left shoulder here, the head, and the right shoulder. It's not really a great head and shoulders, but it's a small one. It's a small time frame. But something like that could be interesting. So trade ideas could be trading the reversal at the head, riskier. Trading the right shoulder, less riskier, especially if 5 to 6 candles have not broken the high. Breaking the support trend line as price continues, interesting. And an option, but not today, in my view. I think it's better to look for such trades in tomorrow's trading session. Because I think, well, this is a 15-minute chart, so I don't want to be too harsh. I thought I was looking at the hourly for a second there. It could be still okay to trade the breakout next few hours, but then after that, I would wait till tomorrow. Ultimately, it could be good to wait for the hourly chart. It might not move too much in between today and London tomorrow. What could happen is the price makes a push up to that zone I mentioned, makes a move down to retest this bottom, but fails to break and makes kind of a bear flag pattern like this. And then the break tomorrow, that could be the most interesting trade, in fact. So this actually could be more interesting. But on a 50-minute chart, it still could be worth shorting here down to 117-ish. 117, just maybe a tad above it. Small trade, but so these are some ideas that I have for the euro dollar. Not right now because I see two bullish candles on the hourly chart, and I think that there could be some retracement potential. But ultimately, the 4-hour, everything is bearish, in my view, for a continuation. All right, either today or otherwise tomorrow, I think. All right, now the questions. Fazal asked at the very beginning already, what is the best, let's see, ratio, best profit to deposit ratio and loss to deposit ratio to have as a beginner? So I'm not 100% sure what you mean with that. If you mean at what point do you want to withdraw your profits? Is that what you mean? So if you have 2,000 euros capital, How much profit do you need before you uh, take that profit? I'm not sure. Uh, if you mean like what kind of return on investment you can make as a beginner, that's maybe what you mean. So if you have trading capital, for instance, if your trading capital is 2,000 euros, and how much can you make as a beginner? Well, as a beginner, honestly, it's best to aim for break even. I know that sounds funny, but I wouldn't aim for a profit. I know that might burst some bubbles of some beginners, but it's better to burst it with the words than losses on the account. Because the thing is that as you start out, you don't have the typically you need to build experience, need knowledge, you need to know how to balance too much knowledge in a way or too many concepts that you're using at the same time. You need to find a trading plan that suits you, and that takes time. If you have ambitious goals, often enough you're going to blow up the account because you're going to take too much risk. So as a beginner, really the best result you can make is break even. If you make break even when you start out, you're doing a great job, an excellent job. Congratulations. Because if you grow that experience, you're going to have some ups and downs, but it's a great starting spot, in fact. Ahmed, hi, good to see you, and Angel, good to see you too. That sounds interesting. Well, we could definitely think about a trip to Bulgaria and a trip to other countries if anyone has a preference. We were thinking about some seminars in the future, so definitely something to think about. If uh, if you know others that would like to join, that would definitely help. So gladly, if you have, if you want to send more info through the email, we can see about probably next year. This year is not going to work out probably, but if you're targeting, if you anything you aim for, it's okay if you risk the same. So if you're aiming for 10% profit, you should be okay with losing 10%. If you're aiming for doubling your account, you got to realize you might be losing everything. So the more risk you take, right, the the more reward you aim for, the more risk you're taking. So if you aim for 20%, you got to count on the fact that you're going to lose 20% at one point, a drawdown at the very minimum. Now, if you get better, of course, and you get more experience, you might be aiming for twice that. So your profits could be twice that your drawdown, right? But 1 to 1 is the minimum if you're trading as an intermediate advanced trader. If you're a beginner, once again, the real target is break even because you still need to learn so much. I don't want to. That's not discouraging. It's really meant as a motivation because it's worth it. But you just have to have realistic targets in mind. Uh, how much you lose it really depends on your own risk. It really depends on your own appetite for risk, how much capital you have in total, and how much you're risking of that capital. But most people can accept 10 to 20% drawdown. Many cannot accept more than that. Accepting 30 to 40% will really shake up a lot of traders. So think carefully. On paper, it might sound like you can handle that 30%, 40%, but if it really happens to you, it might be different. Yes, definitely. Say it. I will send you my email. Alrighty. There we go. So pound dollar. Let's take a look at that. Yeah, definitely say it. Send me an email, and we'll get back to you max tomorrow. Let's see. Pound completing a fifth wave. In fact, on Monday I had the fifth wave completed. Today I changed it to this being a fourth wave and this a fifth. The reason was because of the sideways pattern. If it would have been a deeper correction, it would have happened yesterday. So I combined momentum and correction, the length of the pattern, waves, to come to the conclusion that this morning that this is a sideways zone that is not showing any bullish power, obviously, and it probably will not today. It should have done yesterday to complete an ABC. It didn't. It's going sideways. It looks like a range. Therefore, a break to the downside towards the minus 272 target is likely. And it did. It actually went further than that. It went to the almost the minus 61.8 target. Missed it by a bit. So there's a small space left to 128.20. A good candle, and I think it could continue either now or tomorrow to make that small dip. The problem is it's only 30 pips away from here. The problem is that any stop loss size is most likely more than 35 pips, considering the size of the candles. In my view, the reward to risk ratio is not positive or favorable at this point. So it was a good idea to short it here, even take this candle perhaps, or even take the breakout or about higher, of course. Now, target is too close. Even this candle was a bit too close to the minus 272 target, actually. So I rephrased that. The best trade was this candle on the hourly chart right here. That was a good breakout candle because there was still a decent reward to risk. This was the initial target right here, and the entry is here, and the stop loss can be above here. So it's still a 1-to-1 or close to it. That's okay. That was a good trade to the downside. Now, I personally don't see any trade unless price were to make. The only thing that could happen is this looks like a wave 1. Let's see. This could be a wave 3 and a 4 and a 5 left. So the only thing that could make sense though is to back to this time frame to put a to put a fib from that top to this bottom and wait for a bear flag up to the 38.2 fib. That could happen over the Asian session and something like this, or a rising wedge, some kind of pattern like that, up to 129, 128.90. Wait for a turn at the 38.2 fib and a continuation down to the minus 272 target. The stop loss would have to be just above the 61.8 fib probably to get a 1-to-1 ratio. It's a bit risky, but considering the fib structure, the wave structure and patterns, it could work out. So this kind of pattern like that, or if it makes a bear flag, turns at the 38.2 fib, and then shows a weakness here, the stop loss could be placed just above this high, and down it goes, hopefully. Something like this. That could make sense, but not now. Not now in my view, because target is too close. We need a correction, continuation for one more push lower. I'm not sure if it might continue. I'm not saying that it has to retrace. It is at the S3 weekly, so that's pretty significant. But it might continue. It might go all the way down to 127.50. I'm not saying that that's the end point necessarily. All I'm saying is that it has moved a lot, and that could be a bouncing spot. So I need a retracement, and then I can short it towards the target and perhaps wait for an extension. If it doesn't extend, I would only trade it to the upside if I see a clear bullish reaction at the minus 272 target. I see a 3-wave down, and here I would take it upwards. Only there, only at that spot. In that case, 5 waves down could be completed, and price might be retracing this entire swing with an ABC, which can go back to the 50, the 61.8 fib. All right, is that clear? I hope that everyone sees understands what I'm seeing at the moment. Dollar yen seems to have completed 5 waves up, and I think there could be an ABC correction. Let's see how that goes. But I think that that's a pretty good chance that the price could go back to the weekly pivot point, for instance. I am thinking about putting a fib from this bottom to this top. waiting for price to get to the trend line, although I'm not sure how relevant that is. Let me take it away. The pivot point at least in the 61.8 fib. The 50 fib could be something to reckon with too. This zone right in here, because of these bottoms, it could be a inverted head and shoulders. If price goes choppy like this and hits this support zone and then moves up to the -2, -61.8 target, this can complete a bigger A, B, C potential. In my view, the better setup is to wait for the long at support to take it to the target, more space. All right, Aussie. Well, I was thinking it looks bullish, and price did stop at the 38.2 fib. I'm not sure which fib I used actually in my analysis. Probably this one. Yeah. But it did break. I also said that if it breaks, there's a chance that price will get to the next fib, which it's actually doing. I think the next, I'm not sure how I fibbed it anymore. I was doing the analysis yesterday on a different chart, so I don't remember which particular fib I used. Maybe even this one. It's possible. No, not that one. I don't think it was that one. I'm not 100% sure. I would have to find that chart I was analyzing on. But for the moment, just very quickly, let's use this one. So in any case, I remember the levels. Anything above 77.25 could still be seen as bullish, 77.50. So this is bearish in the sense that it's breaking, and it's in a downtrend channel, but the daily chart could still be up. So I think that it could continue lower, but eventually potentially find a bounce sooner than the others. So I would be cautious shorting the Aussie. All right. Now with regard to the Kiwi, it was a bit different. I did take the Kiwi short. This is wrong template here. Let me change it. I was just probably working. This is my own proprietary system that I use. It's called SWAT. All right, there we go. So the setup was based on SWAT by coincidence, actually, or not coincidence, but here you can see the trade from the entry point, all right, to the exit point. And you can see that was aiming at the S1 and was taking this break right here. Break, retracement, continuation. About 45 pips. Now I think that, it could still continue. I'm not saying it's a good downtrend, but I think the best trade setup was here. So I'm not sure how much it makes sense to analyze. But if it does make a bear flag, I think it's good for a continuation. I'm more bearish on the Kiwi at the moment than the Aussie. So Aussie, I would be careful. Maybe even secretly look for potential bounces still. But I think that the pound and the euro look more bearish at this moment. But as I said, still waiting for actually prices hitting the 61.8 fib at the moment. But I personally am a fan of time pattern. So I'm just looking at this, you never know how far this goes. I would rather wait for 5 to 6 candles, make a pullback like this. Show weakness, I think, is better personally, or show a bear flag, move down, move up, move down like this, and it should be good to go. I think that reduces the risk that for whatever reason this is a bigger bullish bounce than I expect. So I would think that euro dollar, pound dollar bear flags, Kiwi bear flags are interesting for shorts. Aussie, not so much. I would be waiting and see if there's a potential bounce or reversal. Dollar yen, I like the continuation bullish bounce from the 50 fib. Euro yen, I'm bullish personally. To me, looking at the hourly chart, you can see that the price has made a good upside here, and I think it's making some kind of correction, and it's aligning itself upwards. So I would say as long as price stays below this bottom, it could still be a bullish bounce. Even if it retraces deeper, I would still look for a bounce. So one trade idea could be a bounce at 129.25, 128.50. Those are two strong support levels, or the bullish break above this resistance trend line. Now, this upside will probably not be fueled by the euro necessarily, but might be by the yen weakness. So, looking at the dollar yen, I do expect a slight downside first before upside. So, from this perspective, I think that this could be choppy, but eventually I think it will break and continue. When looking at the 4-hour chart, all right, I think there's a chance of one more upside to the R1. Now, I'm not sure if this is going to go much more than that. It depends if this was an ABC or was this a 1, 2, 3, 4, 5. I think the wave pattern at this point is a bit mixed from this point of view. And I will still leave it open, my perspective. But this breakout, I think, is pretty good chance, whether it's a 1, 2, 3 or an ABC. There's a good chance that the breakout to the R1 might happen. All right, so that's about it. We'll take a look at gold as the last one. I will have to close a bit earlier than usual, unfortunately, today. But tomorrow, no worries, we'll be back for the full length. Yeah, gold basically, to me, finishing a fifth wave of wave one at these resistance tops. I think there could be an ABC correction down to the 61.8 fib, and then a continuation upwards. So, from my perspective, yeah, as I was already thinking, somewhere in here it's going to bounce, and we'll be seeing an ABC. To me, this looks like a wave 1, 2, probably 3, 4. Might get one more push down for 5, then an ABC, then another 5 wave down, and then an upside. How does the Whisk tool work? Well, basically, sorry, wrong button. You open the script, the yellow, then you go to scripts. So click on this navigator, go to script, click on the script, drag to the chart. Let me apply it to the Kiwi. Sorry, folks, there seems to be some hold up. Just 1 second. All right. Click on the script, drag it to the chart, place it on the top or bottom of your choice. The one I always use is the bottom or top, or if it's in a trend, then I use the top or bottom closest to the moving average. So in a downtrend, I'm looking for a top that's touching the 144 EMA or just above it. Then in case the closest to it. And there we go. The level should be placed on the chart automatically. So you want to change buy or sell, buy for upside, swap, sell for downside. And we see that the best is below the third level, which is here, as you can see, right there. The third level and down to the fourth level. All right, so very close to the fourth level. That's what I was aiming for, but I took it at the S1 instead. And you'll have the levels. So that was partly the SWAT was the Wiz was part of this setup in the sense that it broke below the third level, didn't retrace, just missed the long-term moving average, and hence the fourth level was still open as a target. SWAT is the system I trade with, my own personal systems, and I don't show it here. But we could just use discretionary trading here. But if you're interested in the Whisk tool, this tool, that is for free, and just send an email, and I could send that to you. All right, I'll add the email in the chat. All right, folks. If my keyboard will cooperate at least. There we go. So, hope that you will join us tomorrow again with the webinars. You can find out by going to admiralmarkets.com, education, webinars, register for Nana's session, my session, and our educational webinar on Thursday. For more information regarding some of these indicators that you've seen, you can also go to MT4 Supreme Edition, by the way, like the Keltner, Admiral Keltner band indicator, very useful, and others, 60 extra plus features right there. Wish you all great trading. For other indicators that are mine, like the Whisk tool, you can send an email to, for those that are watching at home. Let me write that down quickly because I only sent it to the viewers at home. One second, folks. And I will just, it's taking a bit long, but I'm trying to write it down for you here. For those viewers at home, sorry about this. I think that most are giving up now, but hang on there. All right, there we go. Took a little bit of effort, but there it is. There's my Hotmail address. So yeah, if you want that Whisk tool, feel free to send me an email right there. All right, thanks, and wish you all great trading. Cheers.